Oopsie. So I will just quickly start by saying that first and foremost, the U.S. The U.S. non-farm payrolls are delayed. The data is delayed by 7 days due to the U.S. government shutdown. Now, just as a reminder why the indicator is important, well, we all know that the job creation is an important leading indicator of consumer spending, which accounts for a majority of overall economic activity. We can see that according to Bloomberg survey, the current forecast is actually 100K, while the last data that happened in September was a drop from 193K to 148K. What are the experts currently saying? Let me pull up a couple of other charts, and these are some of the forecasts that were provided by Bloomberg, as we do know that Bloomberg conducts a survey. So what actually some of the experts are saying, well, they believe that the US job growth likely slowed in October as a partial shutdown of the government delayed hiring and forced some workers to stay home, undermining the economy's fourth quarter growth prospects. While the hit 16-day federal government shutdown will be temporary, it will undercut a labor market that was already struggling. Job gains slowed to an average of, as mentioned, 143K per month in the third quarter after increasing by a fairly brisk 182K in the April-June period. As a result of the shutdown, we also will see the release of the US unemployment rate that is forecasted to climb 7.3% from September's nearly 5-year low of 7.2%. In addition, economists estimate the shutdown would payrolls by as much as 50K jobs last month. The release will be already in 15 minutes. And I can also share some of the information that was provided by Dukascopy community members. Dukascopy has a very interesting fundamental contest, and the community members have an opportunity to share their thoughts on what will be the impact on the most traded currency per Euro USD. Now, based on this chart that we have right here, we can see that, well, almost half, 54% of the community members who participated in the voting believe that the impact will be bullish, while 46 believe it will be bearish. What are some of the comments that support the views of the community members? Well, for example, Alifari says US job growth is expected to slow down in October as partial shutdown of the government delayed hiring and forced some workers to stay at home. This is what we have already mentioned today. At the same time, some believe that bearish expectations are too low, especially when we compare it with the recent data from the US. So these are some of the views that community members provide to support their forecasts. Now, I see that Thomas is already ready to talk about a little bit about the technicals. So feel free to tune in and participate in our discussion, Thomas.
Yes, hi everyone. I will try to be as concise as possible. So first of all, I'm in platform at the moment, and I will be presenting a possible trading strategy in case of the positive news coming out. So in such case, United States dollar would gain strength, right? And in such case, the support for that comes from actually two things. So first of all, the current market is strongly bullish. As you can see, 73% of traders hold long positions on the pair already. And in 50 pips range from the current market price, we can see that a substantial share of pending orders, 68%, are set to go long. So in case of some volatility in the market, there will be additional pressure for the pair to go a little bit higher. And what do we see now? Well, first of all, I hope you can see what is written on the here. So currently the pair actually is trading Well, at the previous daily low, which was reached around 6 GMT, right? And of course now it reached a little bit different. And in a sense, pair is being depressed by the 20-day simple moving average. Of course, I found this small trailing lower, let's put it that way, a little bit interesting. And well, if this marks 12, no, I'm sorry, not 12, 1 GMT. This marks 1:30 GMT, and this marks 13:30 GMT when the news are supposed to go out. Right, so until that, I expect the pair to sort of trail in slightly below the 20-day simple moving average. It might dip to this new low. Let me mark it at 27.28. So I guess 28 Japanese yen in general, right? And suggestions actually would be to place, first of all, the stop loss, of course, in case something goes bad, at 97.82. That would be the weekly pivot S1, which is the closest strong support level for the pair, as at 27.63 we have yesterday's low. Before that, there is absolutely nothing. So I'd pay attention more to this weekly S1 and 97.82.4, right? And yes, as I mentioned, 20-day simple moving average is a little bit too close of the target. It might cause some turbulence, but I don't think it will depress enough the initial 98.176. We're seeing we have 200-minute simple moving average. I prefer to use this sort of indicator in the longer terms than 1-minute chart, which are seeing at the moment. So I guess the most immediate take profit could be at the daily high, which is today's high at 98.239. And after that, if you're aiming for something a little bit higher or more long term, let's say medium term, up to 10, 15 or 20 minutes, maybe up to half an hour after the release of the news, right? I guess take profit could be set at the weekly point at 98.3039. So yes, just recapping a little bit, support for this comes from the fact of currently very strong market sentiment and majority of pending orders being set in favor of the bulls. So in case we're seeing a positive surprise for the news, better than expected news, we should see some additional push for the pair, and in case of volatile moments, it should provide significant support for the pair. So once again, guess that might be all from my side. Let me just make it more. So yeah, just recent low, today's low is at 97.98. So I guess I should rename daily low number 2, which was the second lowest level for the pair. And to recapping once more, I would say stop loss at 97.82, weekly pivot and take profit at either daily high 98.239 or weekly pivot point at 98.339. So I see what time is it now left till the release of the news? As far as I understand, 7 minutes. So I guess I will be giving the floor to my colleague Sander, and I will make a screenshot of what is the current situation in the market, and we'll leave it next to the scenario of the possible trading strategy. So I guess that will be all from my side. If you have any questions or remarks, feel free to write in the chat section, right? And we'll try to address all the comments and issues or to clarify the situation. And I give floor to you, Sasha.
Nikas. So, as Thomas already said, I'll be speaking about the possible negative scenario, and let's assume that the unemployment rate would tick up, for example, to 7.4%, while the payrolls will fall below 120K. So in this case, we'll see weaker greenback, and thus the currency pair Australian dollar and United States dollar will move higher. So actually what makes this pair worth discussing is that currently market sentiment is strongly bullish, it's 66%, while the Aussie is bought in 72% of all cases, and the greenback is also bought, however it's just 56% of all cases. And so in case we'll see worse than expected data, then we'll see the uptrend on Aussie and greenback. And speaking about the possible support from the pending orders, as you can see, the majority of them in the 50 pips range are placed to buy the 69%, while in a longer 100 pips range, that's also the majority of them are placed to buy. It's 66% almost. So yeah, as you can see, even in case of the uptrend, the pair will get additional bullish momentum from the pending orders. So as to the technical levels, as you can see, they are actually some mixed signals on the variety of time frames. And as to the short term, as you can see, indicators on the hourly and 10 minutes chart, as well as weekly charts, are sending buy signals, while indicators on the 30 minutes, 4-hour, daily, and monthly charts are pointing to the opposite direction. However, I would like to point your attention at indicators on the hourly chart, and as you can see, MACD indicators is suggesting further appreciation of the pair. Well, I will show it a bit later. So the possible scenario how to trade Aussie and greenback in case of the negative surprise. As you can see, I recommend to, once again, that's just a suggestion how to trade on the news release. That's not a recommendation. And as you can see, we suggest to enter the market at 94.7 and to place take profit at 94.91, while the stop loss could be placed at 94.38. So now let me turn on my screen sharing and explain why I choose such a strategy. I hope everything is working. No, everything is not working. So, a couple of seconds. Okay, nothing is once again moved. So, so sorry guys for some small technical problems. Yeah, we still have some 4 minutes before the release, so we'll manage to discuss everything what is needed.
Yeah, once again.
By the way, while my screen sharing is still loading, I guess I can place a table representing sentiment all over the crosses with the greenback, so you can have a look at them and see why we have chosen these specific pairs. And as you can see, the majority of open positions on the Aussie and greenback are placed to buy the pair, as I already said. So So while speaking about the United States dollar and Japanese yen, it's almost it's also bought in 75% of all cases. So I think will be working now. Let's try once again. Yeah, I see Thomas said that everything's fine. Yep, thanks to my dear colleagues. And so, as you can see, Aussie and greenback was trading in a strong uptrend during all this year. However, After reaching a high of 97.59 in October, the pair began a period of consolidation, and currently the pair is trading at 94.68. So yeah, and the possible trading strategy could be the entering point at daily pivot at 94.74, as already mentioned, and the take profit, it's a 200 bar simple moving average at 94.99, while the nearest stop loss could be placed at 4-hour support and the recent low at 94.38. So that's just a short-term strategy, while in a longer period, I guess it could be the same entrance point at the pivot, while the take profit could be placed at weekly pivot at 95.04, and the take profit could be a weekly support and November 1 low at 94.21. So yes, we can have a look at the 5 moving up. Yep, and I really appreciate if Gita can tell me what are the news. Let's have a look at the 1 minute charts.
Not yet really.
Yeah, and by the way, there's this nice green candle on the United States dollar and Japanese yen, and that's already 40 pips movement, so yeah, very remarkable movement. Yeah, but what's happening with the Aussie? Yeah, it's go down, so that's, I guess, better than expected
Actual
data from the United States.
200K.
Oh,
204K.
okay, definitely better than expected. And in this case, we can pay attention to Thomas' strategy. And if I recall correctly, he suggested to place a take profit at 98.23 or 33. However, as you can see, the market reaction is already, and the price is already hovering above the possible take profit. So yeah, if you place orders as we suggested, then you would be able to make a nice and smooth take profit. So yeah, and I guess, and what about the unemployment rate, Gita? Perhaps you can also.
The unemployment rate is 2.3 as forecasted.
Yeah, so unemployment rate is 7.3% as it was expected, while the payrolls were significantly above the estimates, so suggesting we can expect something in the greenback. Yeah, so we can already forget about the trading scenario with a negative outlook and switch to the positive outlook for the United States dollar and Japanese yen. So just yeah, 1 more second, sorry guys. Just what we have in a bigger time frame on the United States dollar and Japanese yen. Yeah, if I recall correctly, there was also a strong bullish sentiment on the thing that both will push the pair even higher, and taking into account recent data, then we can stay rather bullish on the pair. Yeah, so that's a 1 hour chart. Yeah, 1 second guys. So yeah, and the pair is already approaching strong level around 98.85, while the next stop would be a daily resistance and the weekly resistance at 99.22. So in case the trend will persist, I guess this level will be retested once again, and so
Back the
for
floor
the
to
long
you,
traders,
and what
it's
are your
90
thoughts on the
resistance,
latest
and
economic data release?
so I guess all active.
Please turn your microphone back on.
they're saying really strange things like the slim down and the closing of the government by the Republicans to stop Obamacare, and the combination of that is showing really great numbers inside the employment numbers, which again, it seems crazy. We're looking at 238,000 versus 193,000. They're talking about 212,000 and a 204,000 number, internal numbers inside of it. They haven't shown what the participation rate is at the moment. I can't find the participation rate. The number due to 7.3, as you said on there, and it just has everybody scratching their heads. They're not sure what went wrong and what went right, because they were looking for anywhere from, say, 100,000 to about 140,000 over here, and 204,000 is here's participation rate, 62.8 versus 63.2. They dropped the participation rate again in October, so we lost more people in the workforce. I would have to say, more than anything else, because of the way the numbers are in every direction, it just shows you when you the rate of participation is the major factor for the employment numbers the way they look in the United States right now, and that itself is skewing everything. Thomas, you could definitely take a look at the participation rate, put a chart up over time over the next few months when we're doing the labor numbers, and I'm sure you'll be able to come up with something interesting. The participation rate has been dropping just dramatically in the United States now for the last 5 years, and it's definitely something worth combining your charts with when you look at your charts on the first Friday of the month statistics.